Google operates in multiple industries, and in financial services, they have a larger than life influence. When they decide as a private company the rules of how to play in these markets, in these digital financial services markets, and while at the same time they are also players in the same financial market, there is a problem. There is a problem. Hi everyone, this is Ali Hussein Kasim, and this is Ali Talks Tech. This week has had some quite interesting news around Africa when it comes to the tech ecosystem. But this week I have decided to focus on one particular news story. And this is in relation to the Google story on what is actually going on in financial services as far as Google is concerned, but also generally around how Google is behaving when it comes to access to its Google Play platform. Now, the Chinese have a saying, some say it's a curse, and it goes like this: may you live in interesting times. Now, for a long time, lots of us, including myself, thought when somebody told you, may you live in interesting times, he actually meant well for you. But in actual fact, that Chinese saying, or curse, means completely the opposite. It means somebody wishes you chaos and disruption in your life. Now, let me start by a story that has just happened in the last couple of days. Google announced that they are going to stop certain apps in financial services to access data about users. Let me read you a post that I did today morning on LinkedIn. I'm on record saying that Google is a de facto global financial services regulator. From the end of May, Google Play apps providing personal loans will not be allowed to access the handset's external storage, photos and videos, contacts, precise location, and call logs. According to TechCrunch, there have been multiple reports of debt collectors using information such as contacts to harass borrowers. This is something I personally have experienced when a digital lender randomly accessed a borrower's phone book, picked my phone number, and started harassing me to force me to pay someone else's loan. Now, let me tell you that personal story. This company's customer service lady called me and told me one of my employees had borrowed a certain amount of money and they are refusing to pay. Turns out this employee was late by like 3-4 days to pay this loan. This customer service lady decides to harass me for one full day. I recorded around 100 calls during that day. This lady telling me if I don't pay the loan of this guy who I don't know, they will call me every 10 minutes. And guess what? She kept her promise. So that's one side of the story. Now, in a policy update, like how nation states issue policy updates, Google states, for the purposes of this policy, we consider financial products and services to be those related to the management or investment of money and cryptocurrencies, including personalized advice. Now, this is something no regulator in the world can do without the cooperation of other regulators. To say in one fell swoop, shut down a global fintech's ability to mine data across multiple jurisdictions. Should a private company have that sort of power? Let me pose that question again. Should a private company have that sort of power at a global level? These are very interesting times that we live in. We know that digital lenders, by and large, quite a number of them, have actually gone against privacy rules, data privacy rules. The question that we have to raise is this: are global regulators, well, there really aren't any global regulators, are regulators, country by country, unable to deal with this issue? Or should they be the ones with the jurisdiction to do this? Should Google have the power to actually do this? Now, there are obvious positives around what Google is doing. The question in most minds of fintech founders is this: is Google an honest arbiter in this space, considering the fact that Google is in the fintech space itself with Google Play and other services? A friend of mine sent me an interesting note around this, and I want to read that to you guys. What he said resonated with me, but I want your opinion. What say you about this? He said, I wonder what impact this could have on financial inclusion efforts in some markets. For example, digital onboarding might require a customer to upload a photo of their ID, but if the app can't have access for photos, does this end up excluding people from services? In some markets where addresses don't exist, like Africa, for example, location services can help fulfill the regulatory requirement for address verification. Does its removal mean further exclusion? Question mark. He goes on to say, personally, I'm strongly against it. It opens up potential for bias, lack of local context, and as stated above, serious risk to financial inclusion with billions globally still underbanked, underserved. Let the local regulators make the rules and require Google to adhere to the rules of the jurisdiction, but not create their own sweeping global regulations. I pose this question again. What are your thoughts around this? You know, guys, this question of major players in the technology space worldwide creating sweeping rules that affect others in markets they are also playing in creates an obvious potential conflict of interest. Let me read you another story. This happened again this month, a couple of days ago, from my friend Annie Njanja, who reports for TechCrunch. It goes like this. Google removes hundreds of Kenya-focused loan apps from Play Store. Now, let's step back a bit and let's agree that digital lending in Kenya has by and large had its dark moments. With me being one of the persons actually involved and affected by this. But I still stand by the fact that to give one organization powers like this and allow it to arbitrarily remove apps from its Play Store creates a major, major watershed moment, not just in Africa, but across the world. The European Union has dealt with this matter very, very effectively with its Digital Markets Act. And the Digital Markets Act takes care of some of these potential conflicts of interest. and the Digital Market Act of the European Union specifically says some large online platforms act as gatekeepers in digital markets. The Digital Markets Act aims to ensure that these platforms behave in a fair way online. Together with the Digital Services Act, the Digital Market Act is one of the centerpieces of the European digital strategy. Here's a challenge for the African Union. Is this something that the African Union can borrow from? Because when you act as a gatekeeper, you must then adhere to certain particular issues that create fairness in the market. What is a gatekeeper? According to the Digital Markets Act, in order to be designated as a gatekeeper, an undertaking needs to provide one of the following core platform services, or CPS, provided in the table that you can see on the screen here right now. So, what are these gatekeepers? Who are these gatekeepers? Number one, according to the Markets Act, online intermediation services, online search engines, online social networking services, video sharing platforms, number independent interpersonal communication services, operating systems, web browsers, virtual assistants, cloud computing services, online advertising services, provided together with any of the CPSs listed above. Guys, let me start, or rather end off my conversation today by saying emphatically that I have nothing against Google. I'm one of the guys who uses Google services across the board. But I am also very, very conscious of the potential of abuse of these platforms. Google operates in multiple industries, and in financial services, they have a larger-than-life influence. When they decide, as a private company, the rules of how to play in these markets, in these digital financial services markets, and while at the same time, they are also players in the same financial market, there is a problem. There is a problem. And this problem must be addressed at the Pan-African level, not just individual countries. What Google is doing is entering into, unfortunately, I have to use this word, entering into unholy alliances with regulators across Africa, individual regulators, and ensuring that they block off en masse, wholesale, digital lenders. Let me tell you a story. And some of these players are afraid to come up and talk because of potential negative influence to their businesses. It is my duty as a private citizen to make sure that I talk about some of these digital lenders who are already licensed by the central banks, specifically the Central Bank of Kenya, are still finding problems with Google accessing updates to their applications on the Google platform. Why is that? Why has Google designated itself a global regulator, even when individual country regulators have actually given imprimatur to these players to actually function? This is something that we must continuously ask. This is something that we must put Google on notice to ensure that they play fair. That's all people are asking. I shall end here today, guys. This is Ali Hussein, Ali Talks Tech. Thank you very much.